Welcome to the Meta Exchange, where we provide expert insights on the world of trading. Today, we're going to be discussing a powerful strategy shared with us by our viewers. This strategy is called the recovery range. We have watched a few videos on this strategy and we are intrigued to see if this strategy really works in the real market. This strategy is designed to help traders capitalize on market corrections and recover any losses they may have incurred. We have conducted an extensive backtest on this strategy and we are excited to share the results with you. Stay tuned to find out. Hello everyone and welcome to the Meta Exchange. In today's video, we'll be backtesting extensively on the strategy shared by our viewers. This is a powerful strategy commonly known as the recovery range strategy, never lose strategy, or the hedging strategy. We have grouped the video into 5 main chapters. In the first chapter, we'll be discussing the basics of the recovery range strategy. We will explain to you how it works and the key concepts and principles that make it an effective tool for traders. Next, in chapter 2, we'll be backtesting this strategy on the forex market, namely the Great Britain pound and USD. We will show you how to apply this strategy on the market and how to adapt it to suit different trading styles and risk appetite. After that, in chapter 3, we have coded the strategy into an expert advisor and we will backtest it extensively on the EURUSD in the 2021 market price. Next, in chapter 4, we will be sharing with you our observations from using the recovery range strategy. We will discuss the results we have achieved and provide you with an honest and unbiased assessment of the strategy's performance. Last but not the least, in chapter 5 we'll be discussing how to improve the recovery range strategy and share with you the tips and tricks for getting the most out of this strategy. If you are new to the Meta Exchange, remember to click the subscribe button as we will be sharing profitable strategies and best settings on our YouTube channel. Remember to also click the notification icon so that you will not miss out on our new videos. First, let us share with you how we use the recovery range strategy. We have referenced this strategy from the 2 YouTube videos and their link is in the description. The example in the YouTube video suggests that we enter a buy trade with one lot and a take profit of 60 pips and a stop loss of 20 pips. If the price hit the take profit target, then we are good as we would have profited 60 pips. However, if the price were to go against us, instead of closing the trade when it touches the stop loss, we will keep the losing trade and enter a second sell trade with 1.4 lot and a take profit of 60 pips. This will provide a hedging effect on our losing trade. If the price moved down and touches the take profit of the sell trade, we will have a net profit of 4 pips. But if the price goes back up to the entry point of the buy trade, we will enter another buy trade with one lot size and same take profit level. If the price touches the buy trade take profit, this will give us a profit of 8 pips. However, if the price goes back down to the sell trade entry level, we will enter another sell trade with a lot size of 1.4 and the same take profit level. If the price touches the sell trade take profit level, this will give us a profit of 8 pips. Sadly, if the price goes back up and touches the entry point of the buy trade, we will enter another buy trade. However, instead of entering at the default 1 lot size, we will enter with a lot size of 1.9. This will allow us to stay profitable if the price is to hit take profit, bringing back 8 pips profit. We will continue the buy and sell entry whenever the price reaches the entry point of the trade and we will increase the lot size by multiplying the previous lot size with 1.33. This strategy will continue until we get a winner. By now you should be clear with the recovery range strategy. Let us proceed to the next chapter where we will show you how this strategy can be applied on the forex market. In this chapter we will be showing you how you can use this strategy on real market prices. Over here we have the chart for Great Britain pound versus USD. As mentioned in the previous chapter, we will enter the first trade with a take profit of 60 pips and the stop loss of 20 pips. As you can see, the trade turns out to be a loser. So we entered another trade which was able to hit the take profit level. These 2 trades gave us a total of 4 pips profit. We move on to the next trade. We entered a buy trade first with the same stop loss and take profit level. The trade turns out to be a loser and we entered a sell trade. However, instead of hitting the take profit, it went back up to hit the buy trade entry, thus we entered another buy trade. The buy trade hit the stop loss and we had to enter another sell trade. As you can see, the trade turns out to be a winner, and these 4 trades gave us a total of 8 pips profit. Moving on to the third example, we entered another buy trade first, which hits the stop loss very quickly, thus we had to enter a sell trade. The sell trade also hits the entry for buy trade, so we entered another buy trade. The buy trade turns out to be a winner. The 3 trades gave us a total of 8 pips. The next example shows an ideal scenario where the first trade turns out to be a winner and there was no need for us to hedge the losses. We get a total of 60 pips from this trade. The next example shows that sometimes if the market moves sideways, we might need to enter a few more trades. In this example, we entered a total of 6 trades and gain a profit of 6 pips. Moving to the next example, we used a total of 4 trades to get a profit of 8 pips. Last example, we entered 2 trades and it gave us a profit of 8 pips after netting each other off. As you can see, the price will bounce between the recovery range, and eventually, it will go above or below the take profit of the buy or sell trade. By now you should be familiar with the mechanics of this trading strategy. Let us proceed to the next chapter where we will backtest this strategy extensively on EURUSD for the year 2021 by using an expert advisor that we have coded by ourselves. In this section, we will backtest this strategy on the EURUSD using the tick data from the whole of 2021. As this strategy has given us promising results for the Great Britain pound versus USD. We want to see if this strategy is profitable throughout the year of 2021. This strategy uses price level to enter a buy and sell trade. We do not need to be too concerned on which time frame this strategy is applied on. For demonstration purposes, we will use this strategy on the 1-hour time frame. Similarly, there is no risk to reward ratio to be applied on this trading strategy. Instead, we will only need to set the lot size used for each trade. We have coded an expert advisor to help us automate the back test of the grid trading strategy. We will set the testing date from end of December 2020 to the start of January 2022. This will include the test dates of whole of 2021. We will use the default setting of 0.1 lot size. The multiplier is set to 1.4. We will set the take profit level to 60 pips, and the level to enter the opposite trade at 20 pips. Let us start the expert advisor. The program will take some time to backtest the strategy. While our expert advisor is running, if you are new to this channel, please tap the like button and follow us for more in-depth analysis of different trading strategies. Please also comment down below if there are any backtesting settings that you would like us to include. The backtest has ended, and these are the settings we have used for the backtest. We have checked through the result from the backtest, and I must say the result doesn't seem as promising as we have manually backtested previously. We can see that the account was totally wiped out. You must be wondering, why did this strategy fail even though it gave such a good result back in chapter 2? Let us proceed to the next chapter to analyze the result and see what happened to the profitability of this recovery range trading strategy. In this chapter we will go through the results from the recovery range trading strategy back-tested on the EURUSD for the period of year 2021. We have summarized the observations into 3 pointers. Observation 1. There was big drawdown when the market moves sideways. The recovery range trading strategy does not perform well when the price is moving sideways. This would result in multiple trades to be opened. This is the equity chart from the back test. The red box shows a huge drop in the equity. Let's examine the trade that caused it to happen. This is the chart that has many sideways movement. You can see that there were many open trades and each of them were higher lot size than before. There were a total of 18 concurrent trades and the highest lot size used was 158.6. This would mean that each pip is trading at $158.60. No wonder the account can be wiped out so easily. It is obvious that after some trades that were opened, the multiplication effect will increase the lot size drastically. It will be huge for the account to sustain. Thus, it will cause the account to be wiped easily. Therefore, with this concern in mind, we might want to consider starting small. Instead of using a 0.1 lot size as a starting point, we could consider using a 0.01 lot size. Nonetheless, with the multiplying effect, the small lot size trade could also be multiplied into a huge lot size. It does not guarantee that our account will not be wiped out, but it will reduce the probability of that happening. Observation number 2, diminishing account balance. The recovery range strategy suggested that each trade would be profitable as long as the price touches the take-profit level of either the buy or sell trade. It will hedge all the losses and give an overall profit. However, in the actual backtest, we can see that the strategy did not give us a profitable result. Some trades even caused the profit to be reduced. We started with a $10,000 account, and the amount dropped to below that. So what happened to the 6 to 8 pips wins? Over here we have the trade report that has 6 trades, 3 buy trades and 3 sell trades that were executed. By right, we should have a profit of 6 pips, which in this case amount to $6. However, instead of profiting $6, we had a loss of $6.58. As you can see from the red box, the reduction is due to the swap and commission fees. We need to pay for the swap fee for keeping the trade running overnight and the commission for entering the trade. All this small amount of money adds up to be a substantial amount. After the subtraction of swap and commission fee, you can see that the balance left is indeed as the amount reflected at the top of the final trade. Therefore, instead of just subtracting the winners from the losers, we need to take note of the swap and commission fees. These are the hidden costs that will eat away your profit. We can consider using higher multiplier to give us more profit, or increase our risk to reward ratio so that each profit will cover the swap and commission fees. Observation 3. Trades entered in low volatility time. As we have previously mentioned, the recovery range strategy does not perform well when the price is moving sideways or during low volatility times. To test that the observation is true, we have added another indicator to help us identify the volatility of each trade. In our example, we use the average true range, short form for ATR, to give us some sensing if the strategy really fails when the market is in a low volatile range. We ran the backtest with the same setting and enabled the ATR indicator. From our analysis of the results, most of the huge lot size trades were incurred when we start the recovery range strategy with a trade during the low volatile period of the week. Therefore, we should only use the recovery range strategy on currency pairs that are most volatile during the middle of the week or when there is more than one forex market session, such as the New York and London market session. Let's move on to the next chapter on how we can improve this strategy to give us a better result. In this chapter, we will share with you the improvements on how you can use the recovery range strategy. Let us go through the list of the observations that we have made, and what are the improvements that we have suggested. First, to counter the big drawdown encountered, we will use a smaller lot size trade instead of 0.1 second. To counter the diminishing account balance, we will use a bigger multiplier or increase our risk to reward ratio. This means that our take profit and stop loss range should be adjusted. Third, to counter the trades entered at low volatility time, we will use ATR to filter trades that do not meet the volatility requirement. Let us use the optimization feature on MetaTrader 5 to do an extensive backtest. Instead of using 0.1 lot size for the initial trade, we will switch it down to start off at 0.01. This will reduce the likelihood that our account will be met with a margin call so easily. Next, for the multiplier, instead of just using 1.4 as the multiplier, we will also increase the testing range from 1.4 to 2.0 with an increment of 0.1 each time. Next, for the take profit level, instead of using 60 pips as take profit, we will start with 50 pips and end off at 100 pips with an increment of 10 pips each time. Similarly, for the stop loss level, which is used as the entry point for the opposite trade, instead of using 20 pips only, we will end off at 60 pips with an increment of 10 pips each time. Lastly, we will add in the ATR filter to check if the trade is in a low volatility range. In this example, we will enter a trade when the ATR value is above 0.0018. All these permutations will result in a total of 210 settings. Let us run the backtest and see which one will give us a good result. After running the expert advisor for some time, we have collected the best result. We can see that the best settings are as follows. Lot size will be at 0.01. Multiplier level at 1.9. Take profit level at 70. Entry point for next trade at 20. You can refer to the diagram on the right to see the entry of buy and sell trades. Overall, this setting, on a $10,000 account, gave us a profit of 8.27% with a max drawdown of 4.37%. Which means with $10,000 account, we can earn $827 with a maximum drawdown of $437. Even though this strategy did give us a positive return, we must still warn you that this strategy is very risky. Remember to always do your own research and never risk more than you can afford to lose. We hope this video can provide you with the information and awareness of such trading strategies and the potential pitfalls of using such strategies. And there you have it. In this video, we have shared with you how we use the recovery range strategy. In the second section, we have provided the forex market example of using the recovery range strategy for your understanding. In the third section, we have shared with you our backtest result from using this strategy on the EURUSD pair for the year of 2021. In the fourth section, we have analyzed the results from the backtest and provided our observations and shared with you the potential pitfalls of using this trading strategy. Last but not least, in the last section, we have optimized the recovery range strategy and shared with you the pointers to take note while using the recovery range strategy. We hope this video can give you some ideas on how you can use the recovery range strategy to create a profitable carefree strategy. All we like to ask for is for you to kindly like, share and subscribe to our channel. You can greatly help us with the YouTube algorithm and motivate us to create more winning strategy videos. We would like to hear your suggestions on how to improve our strategy. Please feel free to comment down below and share with us your thoughts. If you have a trading strategy that you would like us to backtest or to create an expert advisor from it, please email us at themetaexchange@gmail.com. Thanks for watching, and be sure to subscribe to our channel for more expert insights on the world of forex trading. Thank you. The Meta Exchange, signing off.